and higher lows forming on the 4 hour, and we would assume this is a second higher low. We wouldn't know that until it breaks the high. But on the 15 minute, what we want is the same thing to happen. So I draw it on here. This is the 15 minute, creating lower lows and lower highs. We see a 15 minute shift to the upside, creating high highs and higher lows. And now we can start to buy. And we will keep buying and keep buying until we at least reach this higher time frame structural high. And I'm going to share on the chart some positions that I took literally yesterday, which was the 5th of March, following this exact framework. What you could also do at this point, if you want, which is just solid trade management, instead of taking profits at the structural high point, you could trail your stop and continue that trade. So that's internal structure. Remember, that's the 4 hour, right? Next up, we're going to be covering external structure. And I have some examples I'm going to show you. So let's just grab this and we can draw on the 4 hour chart again. Now remember, this is 4 hour chart. So we have 4 hour in a bullish market, which is printing higher highs and higher lows. Now, how would we behave in this sort of market? Remember, if the 15-minute time frame is what I would assume 80% or above of your entries to be, the 15-minute time frame is all you need for entry. If the 4 hour is printing higher highs and higher lows and it's not creating any lower lows, the 4 hour can, by the way, run liquidity like this. That's fine. It does not mean we have shifted bearish. This could be a 4 hour sweep of liquidity. Let's add this in there. You see, one low, two low is confirmation of a shift. One low and a reaction to the upside is just a sweep at that stage. So let's now draw on the 15-minute chart and identify what we would do. So we would wait simply, let's say after this 4 hour swept. Now, if you're going to get a 4 hour run on liquidity, that means your 15-minute is very likely bearish. It's printing lower lows and lower highs. So the same thing you would do, you would wait for when internal 4 hour range structure, you would wait for that 15-minute to shift bullish at this point. And then what do you have? You have a higher time frame target, structural high, right? And buy until this higher time frame target is met. Now, in an external structure situation, this is when I am much more likely to hold my positions beyond the structural high point, because your trade entry is way down here. Once you're a 2-to-1 and above, or once we've broken a structural high, especially a 4 hour, that's usually when my risk is off the table and I'm looking to extend profit. So I would keep my position open, and this is 15-minute I'm drawing on here. You might get a run on liquidity on the 15-minute, not a shift bearish, and you could hold that position